In the previous video, we talked about common items you may encounter that need to be included in gross income. Well, in this video, we're going to do the opposite and talk about items that are not included in gross income. So good news, if you receive income from any of these sources listed in this video, it is actually not included in your gross income, nor is it taxable. So let's go over this list and see what it is. Well, one thing to note is that this list by no means is exhaustive. It does not include all of the exclusions from gross income, but really ones that are pretty common. So the first one I have listed here is alimony. If you've divorced before and your divorce was finalized in 2019 or after and you receive alimony, this money is actually not taxable. Same with accident insurance proceeds, but this one you need to be careful. If this insurance program is sponsored by your employer, it may be taxable. However, if you yourself purchased it, and if you get into an accident and the insurance company pays you proceeds, you do not include this amount in gross income. Child support payments is another example that you don't need to include in gross income. Now, if you receive money for damages to your physical self, this money is also excluded from gross income. For example, if someone is responsible for you being severely injured, and if you win money in court to compensate you as a result of this damage, then the money is not taxable. Now notice the choice of word that I used there, right? I used the word compensate because when I'm referring to this money you're getting, I'm specifically referring to compensatory damage. This is money you receive in order to compensate you for your loss. So only compensatory damage is excludable from gross income. Now punitive damage, and this is important, punitive damage is included in gross income. You cannot exclude that from gross income like you can with compensatory damage. So if you win money in court intended to compensate you for the damage you suffered, that is excludable from gross income. However, if you want to punish the offender who damaged you, right? You're seeking money not to compensate you, but to punish the person. This is called punitive damage. And again, this money you receive for this will be included in your gross income. The next one up is gifts received. So if your parents give you $10,000, you don't need to include that in your gross income. Same with inheriting anything. Now, interest from state and local bonds, these are commonly referred to as municipal bonds, and these are also not taxable. Social Security benefits are also not included in gross income and are not taxable, but only to a certain extent. Now, if you make above a certain amount of money, then your Social Security benefits start to become taxable. There's a specific formula that you need to use in order to determine if it's taxable and to what amount. And we can go over that in another video, but below a certain threshold, Social Security benefits are not included in gross income. So for now, just know that. Lastly, we have workers' compensation benefits. Now Congress decided to make this exempt from taxes as well, so this is not included in your gross income either. So there you have it, a list of items that are not included in gross income. So don't include these sources of income into your gross income, because if you do, you're paying more taxes than you should be.